So SoFi staying red hot. I mean, stock closing today, 21.39 on this one. It's just been phenomenal stock, to say the least, right? Now, I don't know if you guys follow me on the reaction channel. It's called Jeremy Lefebvre Makes Money. I react to a lot of different either articles or videos, things like that, right? I think it was this video here I reacted to. Anthony Noto, right? Anthony Noto. And Anthony Noto seemed happy. He seemed confident in that interview, as happy as Anthony Noto could be. He's a very monotone gentleman, right? But he seemed very, very confident. He did not seem like an Anthony Noto that is scared of they're going to miss earnings or something like that, right? And keep in mind, SoFi earnings are coming up here quick. SoFi earnings are in 9 trading days from now. They're going to be reporting before the market opens on July 29th. So 9 trading days from now. So that's coming up quick here, guys, okay? And that's obviously going to be a heavily watched earnings from many vantage points. And just not just retail investors. A lot of, I think, funds are starting to get involved with SoFi. And I think that's why we continue to see such great price momentum in regards to SoFi, right? Now, here's a deal with SoFi and where's the stock headed, okay? Listen, they've reported 6 straight double beats. 6 straight double beats on earnings per share and revenue, okay? If they can keep this going and they don't have a bad guidance, they have a good guidance, we're going to see higher highs from SoFi and you'll see the stock go probably $25 plus, right? Which is a big level for the stock. It's been a long time since it's seen 25 plus, but that's where I think we're headed if they come in with another double beat and they have a good guidance, right? I think Anthony Noto, based upon the way his tonality on the interview he did recently on CNBC that I reacted to, right? I mean, honestly, he sounds like a man that has a little more clarity than last time he had the conference call. So I'd be very surprised and shocked to not see a good conference call and good numbers and a good guidance, right? Now, in the private stock group's Discord chat, on the SoFi chat, right? Some members were sharing around kind of SoFi advertising. They're starting to advertise quite a bit on Facebook, Instagram, things like that, and their marketing actually looks really, really good. As well as this, they're advertising this a lot right now. SoFi is doing this 1% IRA match. That is for contributions and rollovers with no minimums. I think it's going to be interesting, right? That's the type of stuff SoFi's really trying to get the big money over. And man, when you talk about getting people to get their IRAs over, that could be talking about substantial amounts of money, right? So we'll see. But SoFi is definitely on their game when it comes to marketing, advertising, getting more and more members to sign up for SoFi's products, get them more interested in SoFi. And SoFi's not just going after, there's a kind of a false assumption in regards to SoFi that SoFi is just going after very young people. They're not just going after those folks. That's a very important group for them, right? You want to get the folks that are not let's call it loyal to a bank yet, right? You want to get the folks that, like a baby boomer, if they've been banking with Wells Fargo for 140 years, they're probably not leaving Wells Fargo, right? If somebody has been banking with JP Morgan for 32 years now, they're probably not moving from JP Morgan unless something goes so bad that they say, oh, I'm going to look for something else, right? So it's very important SoFi always grabs the younger generation, the millennials, Gen Z, and then when Gen Alpha becomes of age to really start getting bank accounts and things like that, it's very important SoFi grabs those folks. But it's a false assumption to think that's only what they're going after. When you talk about things like this and you talk about them marketing things like 1% IRA match, guys, that's speaking to 40-year-olds, 50-year-olds, 60-year-olds. That's not just speaking to young folks that, just got their first job or their second job or something like that. No. This is the type of marketing messages SoFi's sending that is if you're 45, you look at something like that and you're like, oh, that's kind of interesting. SoFi's got something like that. Oh, maybe I should, let me run numbers on what that would mean for me if I did something like that, right? The 52-year-old that wants to retire in 10 years, he might look at something like this and say, you know what has SoFi got going on here? Let me run the math on this. What's the catch? Let me look into this a bit. That's who they're attracting. So do keep that in mind here, folks. Now, I got to give a big warning for everybody in regards to SoFi. It's very important I say this, okay? Because this is, I don't want people to get too excited about SoFi over this next 6 to 12 months. Because listen very closely, okay? SoFi is going to get hit hard in the next big recession. They're not going to be the only ones. It's going to be all the banks. But when the next big recession comes, I'm talking a big unemployment cycle, what's going to happen is SoFi's amount of assets are going to go down considerably during that particular time. Their growth rates are going to stall. And, they try to get a lot of the loans off the books, right? But there will be loan losses for SoFi even during that environment, right? They might not get hit as hard as some others, where a lot of banks and financial institutions, when times get really hard, what happens to them? They go insolvent. They literally go bankrupt, right? They go to zero. Like SoFi, since they get a lot of loans off the books, they shouldn't put themselves in that bad of a situation. But just understand, when the next big recession happens, SoFi stock's going to get hit hard. It's going to hit 50% plus. 50% plus. And so you just got to understand that as an investor, because someday the next big recession is going to come. I don't know if it's 2026, 2027, 2028, 2029. I don't know. But it will come one day, right? And so you just got to understand that about SoFi. Like, that stock's going to get hit very, very hard. Would I be shocked if in the next major recession, SoFi stock falls 75%? I wouldn't be surprised at all. Would I be surprised if it took SoFi 5 years to get back to its old highs after it got hit really hard? Nope. So that's what you got to understand about a stock like SoFi. It is a lot of fun right now. But there's a reason you don't see me risking the farm in SoFi. Because I am of the understanding that the next time we have the big one, SoFi is going to get hit hard, and it's going to be, easily 5 to 7 years before it gets back to its previous highs. It's just what happens in this business, man, especially when it comes to these sorts of stocks, right? The good news is, like I said, with Anthony Noto, he comes from Goldman Sachs. He understands risk very well. He understands trying to get the loans off the books as fast as possible. So SoFi should be able to stay afloat in the next big recession. That's always a risk, but they should be able to, unlike many other financial institutions that literally go belly up. I mean, look back to the great financial crisis and look to how many banks were failing in 08, 09, even into 2010. A long list. But SoFi tries to operate a little bit differently, right?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
So EL stock, a dead and forgotten stock. Dead and forgotten. They hated it. It's got no future, right? It's a great turnaround play. Great turnaround play. And some of the most money you can ever make in the stock market, I'm going to be honest with you guys, some of the most money you will ever make in the stock market is in turnaround plays. Like, if I think about how do you make the most money in a matter of 3 to 5 years in stocks, one is getting a great growth stock before people understand it's a great growth stock and it's valued that way. Like, what is happening with AMD right now, like what happened with Palantir. Palantir, we go back 3 years ago, look at where Palantir stock was 3 years ago today. If I recall, Palantir stock 3 years ago today was probably, my guess is $5, $6, $7, maybe $8 a share, somewhere around there roughly, right? Look where Palantir is today. So if you get to growth stocks before everybody realizes it, so much money can be made in a 3 to 5 year span. It's insane. You've changed your life type money, right? Change your financial life type money. Now, the other way you can make a lot of money in a rather short amount of time in the market is get in a turnaround play. Company that has a great underlying business model, great brands that you can see how they're going to turn this ship around, and then they do it, right? And usually those stocks are down 60, 70, 80, 90% from their previous highs that they maybe were at a few years ago, right? You can get in them for extremely cheap pricing, and then the turnaround happens, and next thing you know, you're sitting on a 200, 400, 800% gain on the stock, and you held it for maybe 3 years, right? And it's just It's very nice. Now, in regards to EL, Estee Lauder, you understand this is more than just Estee Lauder. They own a ton of high-end cosmetics brands, beauty brands, skincare brands, perfume brands, all that sort of stuff. And I challenge you, go to the Nordstrom in your city that you live in someday. Okay, go to a Nordstrom, go walk around the cosmetics area. Try not to look like a freak, okay? But walk around the cosmetics area, look at all the brands, and on your phone, type in who owns blah, blah, blah brand for all those brands you see in the cosmetic section. And what you're going to find is Estee Lauder owns a lot of those brands. A lot of those brands. And you're going to be like, oh, man, they have incredible market share. Like, this is pretty dang impressive, right? Now, this was out here today. The worst may be over for Estee Lauder, says this analyst. Plagued by sluggish Chinese economy and consumer spending habits that have pivoted from prestige beauty, Estee Lauder has been seen in its earnings erode by 80% in a 3-year period between 2025 and 2022 and 2025, right? And obviously, stock crashed because of this, right? But the worse may be behind the iconic beauty brand as the Chinese economy shows signs of life and the management's Beauty Reimagined initiative to recapture revenue growth and double-digit margin gains traction, says the BofA securities analyst here, confirming a buy rating on the stock with a $110 price target. And you know what the analyst's name is? Ashley. I trust Ashley when it comes to a stock like Estee Lauder and understanding what's going on here, okay? If the name was John, I don't know. If the name was Dylan, I don't know. If the name was Bucky, oh, hell no. I ain't trusting no damn Bucky on the Estee Lauder stock. Not Bucky. Beauty Reimagined will transform the company's operating model to a leaner, faster, and more agile, while taking decisive actions to expand consumer coverage, step change innovation, and increase in consumer-facing investments to better capture growth, says Ashley here. 100% in regards to all that, right? And the best thing about Estee Lauder is when this company turns its revenue, which is going to happen at the end of this year and going into 2026, and when I say turns its revenue start being positive again, the company is going to be way more profitable than any Estee Lauder we've ever seen in history. The reason being is they've done so many employee cuts in the last couple of years. So much cost cutting, it's been ridiculous. So once this company starts to get back to revenue growth, oh my gosh, the EPS. Wait to see the earnings per share this company's putting up. You know, it's going to actually be, I think they're going to put up a very impressive EPS even in 2026, but that's going to be nothing, in my opinion, compared to the earnings per share they're going to post in 2027 and 2028. Innovation is key to Estee Lauder's growth initiative. We need to make sure we're not focused on only the top of the marketing funnel, but about the retention of the customer. But at the same time, you need to make sure we bring a wide range of consumers from every age, every ethnicities around the world. Estee Lauder, I'm seeing them definitely get better on social media. To that end, Estee Lauder invested 480 basis points of cost savings back into consumer-facing initiatives in fiscal Q3. Another major component of Estee Lauder's eventual success lies in travel retail, which at its peak in fiscal year 2022 accounted for 27% of total revenue. This was eventually halved between fiscal year 2022 and fiscal year 2025, largely attributed to the rise and fall of Asia travel, most notably Hainan and Korea. Hainan, from my understanding, is like the Chinese Hawaii. Fortunately, Wallace sees green shoots in Hainan and now expects that the market can return to growth in fiscal year 2026. Hainan is now close to flat, suggesting the drag might soon be over, and its duty-free revenues are expected to be down just 1% in May from a peak of negative 45% in April 2024. Wow. Oh my gosh. So, you know, the deal is in China, okay? Based upon what I'm seeing, you guys also know another investment of mine, not in the public account, but I do own in other portfolios, is Wynn Resorts. Wynn Resorts, high-end company, really caters to the top 10% of income earners, top 10% of the wealthy, right? Which is a lot of what Estee Lauder does. What I've been seeing out of them looks very, very good. What I've been seeing out of Macau looks very, very good. Like, it looks like Macau is back strong. Like, it's actually shocking how strong Macau is coming back here. So the moral of the story is, I think we're looking really good. I think we're looking really good in regards to that whole situation, China, everything in regards to that whole situation, okay? Next up here, SoFi Technologies, okay? And then we'll get into the method of my madness. So, SoFi, here's a 1-year chart of SoFi versus NVIDIA versus S&P 500 versus AMD. Insane. SoFi's up 219% in the past year. 219% is one of the hottest stocks in the entire stock market the past year. Incredible. NVIDIA's up 21% over that time. The S&P 500 is up 11% over that time. AMD's actually down 21%. Keep in mind, that's crazy to go back to AMD for just a second here. AMD's down on a year-over-year basis. We haven't even gone positive on AMD in a 1 year yet. Think about that. Let that sink in regards to AMD for a moment. But SoFi, I mean, their stock is just as red hot goes, right? We know the fundamentals of the company are getting better and better and better, right? We know student loan repayments and all that stuff's going on. But you have a lot of this kind of weird stuff going on behind the scenes here that I want to share with you guys. And a lot of this stuff you'll kind of see on X out there, right? So this gentleman, Stock Goat, says SoFi. If SoFi closes over $21 Friday, that's 170,000 calls in the money. That's 17 million shares that need to be purchased. 148 million shares are still short. So the moral of the story is, if this stock closes over 21 on Friday, things could get insane. Absolutely insane. Don't get too excited about this, right? And you got to always be careful of trying to think oh, I'm going to buy call options because this is going to happen, and there's going to be a massive short squeeze and the stock's going to go insane. It's possible, but the moral of the story is here, up and away in regards to SoFi. Okay. Additionally, here, Crossroads posts this. He said, SoFi, I like this almost as much as for the long-suffering retail community as I like it for my own portfolio. I'm still sticking with my $25 price target for end of year. That's fair. Which at times looked laughably bullish, and may in the future look laughably bearish. However, along the journey, we'll likely see new all-time highs, right? And yeah, I mean, a lot of retail investors got in this at really bad prices many years ago, right? And this was another one like an AMD that, people just got the timing wrong. And time in the market beats time in the market, but that's very different than trying to time out an individual stock. Timing in regards to individual stocks is incredibly important, right? Because you could have paid $21 for SoFi years ago, and you're still not even in a profit. However, somebody like myself, I got my timing right in regards to this one. I looked at it, and I'm like, okay, the business is likely flipping over to profitability, blah, blah, blah. Got in a great price, and I've already been able to make insane percentages on this. What is the public count up? 152% or whatever that was we covered at the beginning of this. Timing is extremely important when it comes to individual stocks. If you get your timing wrong, you could be sitting on a stock that you're down on for years. If you get the timing right, you can make 100%, 200%, 300% in a matter of a year. You can make the sort of money in 1 year that people hope to make in 10 or 20 years in the stock market, if you get your timing right on an individual stock. Like I just showed you, SoFi's up 200+% on a 1 year, right? Think for a moment. How long, if you were in the S&P 500, would it take you to make 214% or whatever that was? Easily, 15, 20 years? It's a long freaking time. 15, 20 years, some insane amount. And you've made that in 1 year on SoFi. Incredible. Absolutely incredible. SoFi's letting students know they have to pay back their debt. Oh, yeah. That's a whole situation going on. I like this one. This one was pretty funny. It says, it's like this guy's talking to this girl here. He says, hey, there's a stock called SoFi. It's up 96% the past 3 months, but it still isn't overvalued. With continued strong member growth along with crypto, huge student loan demand, and rate cuts all on the way, the stock is just getting started. Don't miss the boat. Oh, that's funny, right? No, also StockO posted this one. SoFi is once again qualified for the S&P 500. The bar was just raised higher to $22.7 billion market cap requirement. SoFi just broke $23 billion market cap. So, here's the deal with SoFi. Many times when it comes to individual stocks way overshoot to the downside, right? Should SoFi have been $6 last year? My opinion, no. SoFi should not have been $6 last year, but it was. So what happens with stocks? Should Palantir went to $5.98 back in 2022? No. Should Meta went to $88 back in 2022? No. Stocks, many times when it comes to individual stocks, they shoot way too far to the downside and they get down to just silly pricing. Where you're just like, what is going on? This is just dumb. Like, are you kidding me? Okay. Same thing happens on the upside. Stocks will way overshoot to the upside. And so I wouldn't be surprised if SoFi shoots way more to the upside than maybe it should. And that'll be a situation, and we'll cross that bridge when we get to that bridge, right? Palantir is a great example of a stock that I feel like has overshot to the upside too much, right? Which is why I've taken some Palantir profits over the last few months, because I feel like that one has shot too far to the upside, for the next few years. And so that's what happens. Stocks way overshoot to the downside, way overshoot to the upside. Like, welcome to the stock market, right? Next up here, let's talk about method of my madness and some investing principles, some things that can hopefully help you guys, make more money in the stock market, run your portfolio more comfortably, run your portfolios more well, and those sorts of things. Okay. So if you know my strategy, I always talk about it. GVD, right? Growth, value, dividends. Growth, value, dividends. Building out a great portfolio of, 7, 10, 15, 20 stocks, depending upon how much money you have, right? Whatever your level of feeling around diversity is. Building out a great portfolio of growth stocks, value stocks, and dividend stocks. And holding 3 stocks at least in each category, right? Holding 3 growth stocks, 3 value stocks, 3 dividend stocks. And basically, the way I like to think about this is the best risk-reward profile. Remember, the risk and the reward is very important. People a lot of times get in a stock, they only think about the reward. Risk and reward, folks. Whatever the most attractive risk-reward I can find with growth stocks, that's the one I invest the most into. Same thing with value stocks. Whatever has the best risk reward for a value stock, I find it and I buy it. And I buy it the heaviest. Same thing with a dividend stock. Then I go ahead and find a second one. I invest in this one, less money than I did the first one, right? Then I do the same thing again with a third stock. And I go ahead and I invest even less money than I did in this stock, right? What's my third best risk reward I can find for all these categories? And I never get married to a stock. That's the thing. I believe in marriage in real life. But as far as, stock market, Nope. I'm in these stocks, for maybe 3 to 5 years. No, sometimes I'll be in longer than 5 years, right? But even then, I'm still got to get married. Like, there's going to be a day, we're talking about AMD. AMD is so exciting. I will sell AMD stock eventually. I don't know whether that's in 2 years from now, 4 years from now, 8 years from now, 10 years from now, 15 years from now. There will be a day where I start selling AMD stock. And there will be a day when I sell out of AMD likely completely, 100%. I can't tell you when that is, because that's going to depend on so many various factors on what happens with the business over the coming years, what happens with the valuation over the coming years, blah, blah, blah. Billion different things, right? But there will be a day that, Meta, the biggest position by far in the public count, I've held that stock for years. I wouldn't be surprised if eventually someday I don't even own 1 share of Meta. I'm not getting married to these stocks. All these people, I'm never going to sell my Tesla stock. I'm never going to, whatever, do whatever you want. I'm just here to make a lot of money. And so I'm not here to get married to stocks. I don't want to be in a stock that's going to underperform over, look at Tesla stock's a great example. The stock has gone nowhere in 4.5 years now. 4.5 years, right? And that's even, look at how much the market's up in the past 4.5 years. Like, oh my gosh. And yet you haven't made any money in that stock, right? And wait till the next crash in the market, and then people will be talking about the stock hasn't gone up in 7, 8, 10 years. It's like, and so people will waste a whole decade in a stock because they get so married to it. Intel investors did that for the longest time. IBM investors did that for the longest time, right? All these great, previous generations of great growth companies, they went too far to the upside, and then people get stuck in them and they get married to these stocks. And then they look back in 10 years, they made no money. And you know what happens to the dollar over the course of 10 years? Oh my gosh. Don't get married to stocks, folks. No. You're there for the best times. And then when the best times are over, you're out. There's no loyalty in stocks. Because believe me, these stocks are not loyal to you. They have no emotions. They do not care about you. I can promise you, you own Tesla stock, it does not care about you. Nor does Palantir, nor does AMD, nor does Nvidia. They're here, and you're there to enjoy their best times, the most money-making opportunities, and then you're there to move on, right? And sometimes that's 2 years later. Sometimes it's, 5 years later. Sometimes it's 10 years later. All depends, right? Now, additionally, I've been in individual stock picking now for 16 plus years, right? The last 8+ years my whole life has revolved around the stock market the last 8+ years. Before that, I was working Quick Trip. I'm a real estate marketing company before that. I was going to college before that, right? And so, back then I was still really in the stock market community, but I wasn't to the extent where my whole life I was able to focus on it. That really started about 8 years ago. So once my YouTube channel took off and I was able to shut down my real estate marketing company and just focus full time on just stock market, right? I started my private stock group and just focused in on, now my whole life just revolves every day. I wake up Monday through Friday. What's going on in the market? Just seeing what's going on, what companies are reporting earnings, what are their earnings, listening to conference calls, right? Making stock market related content. Like my whole life now just revolves around that. But when you do that, especially over 8-year span, right? Plus you tack on that I've been in the market 16+ years. You know how many stocks I know of that I can just like an artificial intelligence program and just boom, oh, I remember that stock. What's going on there? Let me think about this one a little bit, right? And it's like, I pay attention. I talk to people, right? I have this next slide here. Remember Young Thug Lifestyle? I did a lot of stuff just to live this here lifestyle. Remember that one? That's a classic there, okay? It's a lifestyle. So I talk with people all the time about their opinions on different companies' products and services and things like that. Not even from like a stock angle perspective. Just like, I want to hear your opinion on this. Like, what do you think about this company? Do you like their product, service? Why do you do that? Those sorts of things, right? And so I'm able to essentially like retrieve information on a company that I might not have looked into for years. Like Estee Lauder, looking at that one recently, I remember looking at Estee Lauder like a billion years ago, and I liked the company. But back then it traded at a really high valuation. I didn't like the setup or anything like that, right? Fast forward many, many, many years later, right? 6-12 months ago or whatever that was, and suddenly Estee Lauder started looking very, very attractive. And I said, okay, like here we go. Never been able to buy the stock, and finally looked at it and said, the risk reward looks really attractive now. I'm going to go ahead and start buying this one. Nike, same exact situation. Nike, always a company I've admired, always a company like, I've known of since I got in the market 16+ years ago, right? There was never a time period when I could really go buy Nike stock. It always looked like overvalued, basically, right? Like too richly valued. And all that has changed now, right? And now Nike's a big position for me, and I think it's going to become a very large position as the company succeeds over the next few years and they turn around that show as well, right? So, the more you just get enamored with the community, you stay up to date with things, the more you're going to be able to retrieve information, be able to figure out things, remember companies that, you might not invest in right now, but that I always stay looking into companies. I never stop looking into companies. There's companies I'm looking into this year that I'm not investing in this year. But 3 years from now, 5 years from now, 10 years from now, 15 years from now, under the right circumstance, I will. And so, keep that in mind, right? Elf Beauty, another great example. Like that was a stock I was aware of, since it went IPO. And then I came back to it, a few years later. That was a very opportune time. It was like $7 a share back then, right? And then Elf went through its recent drama. And guess what? I bought a bunch more Elf shares, right? So now there's a video I want you guys to watch if you want some more help in regards to getting more stock market related tips on the market. This video here, this is my favorite video I put out last year. I recorded 10 months ago. 16 years of stock market advice in 52 minutes. Watch that video. You'll get a lot of value out of that one, folks. That's definitely one you're going to want to watch. Like, it's a classic. Everybody that's watched that video has nothing but positive things to say about it. Like, it's one of my greatest videos I've ever put out in the history of the channels in regards to just giving game, man.